Gold prices, huh?
Mm.
They're hitting levels we haven't seen in years. It seems like everyone's talking about it.
Yeah, it's pretty wild.
So we're diving into this news article today to figure out what's driving this, I guess you could call it a gold rush in 2025.
Yeah, gold rush, exactly.
Now, some of our listeners might be thinking, why should I care about gold prices? It's not like we're all running out to pan for gold nuggets.
Right.
But I think getting a handle on this situation actually gives us a peek into how global anxieties can really impact markets and stuff.
It's true. And, one thing that's particularly interesting right now is that even with the US dollar getting stronger, which, usually pushes gold prices down, gold is still climbing.
Oh, really?
Yeah, it's unusual. And it suggests that investors are really hungry for safe haven assets right now.
That makes sense. The article we're looking at today highlights all this increasing uncertainty around the world.
Yeah.
And we all know, gold is that classic safe haven asset. But what makes it so special? Why gold?
Well, you got to think of it like this. Imagine a storm brewing in the economy, right?
Okay. Yeah.
Investors start looking for a safe harbor, some place to protect their wealth. And gold is often that harbor. It's a physical thing, a tangible asset with a long history as a store of value. I mean, we're talking centuries here.
So it's been around forever.
Yeah, it stood the test of time. And, we saw this play out during the 2008 financial crisis, for example. Gold prices jumped way up as investors looked for stability amidst all the chaos.
So it's like a security blanket for investors when things get rocky.
Exactly.
And it sounds like, according to the article, some of these anxieties are being driven by things like former President Trump's trade policies.
Right.
Specifically those tariffs he put in place.
Yeah, those tariffs, they definitely added to the uncertainty. Those kinds of protectionist policies can really shake things up in the markets. Well, when you disrupt global trade like that, it makes investors nervous. They want predictability. And when that's missing, they tend to turn to assets like gold that have, that sense of stability.
It's like a knee-jerk reaction almost. Things are uncertain, better grab onto some gold.
Yeah, there's definitely an element of that.
And it seems like these anxieties aren't just about trade wars, right? The article also mentions rising tensions in the Middle East, especially that conflict between Israel and Hamas. And of course, there's the whole Russia-Ukraine situation still going on.
Absolutely. Geopolitical events like that can have a huge impact on how investors behave. I mean, uncertainty breeds volatility. And when there's conflict happening, investors often seek out those assets that have historically held their value, like gold.
Makes sense. Didn't we see a similar trend during that oil crisis back in the 70s?
Oh, yeah, for sure. During times of geopolitical instability, gold usually sees a bump. It happened during the oil crisis and again after 9/11. It's a pattern that pops up again and again throughout history.
Interesting. So history kind of repeating itself here.
Yeah.
And speaking of history, the article even quotes this metals trader who's linking Trump's, I guess you could say, slightly less aggressive stance on tariffs lately to all the speculation about potential interest rate cuts by the Federal Reserve.
Right.
Is there an actual connection there?
Potentially, lower interest rates tend to make gold prices go up because, unlike bonds, gold doesn't actually pay any interest. So when those interest rates fall, it suddenly becomes more attractive to hold on to assets that don't yield interest, like gold.
So it's like a domino effect. Trade policies influence all the speculation about interest rates, which then has this impact on how appealing gold looks to investors.
Exactly. It all comes back to this underlying feeling of uncertainty in the markets. Investors are just trying to anticipate what's going to happen next, and that anticipation plays a huge role in driving those trends that we see.
Right, because if everyone thinks gold is going to go up,
Yeah.
they're going to buy it, which is going to make it go up.
Precisely.
Yeah.
It becomes a self-fulfilling prophecy in a way.
Wow. So we've got trade wars, geopolitical hotspots, the Fed may be thinking about tweaking interest rates. And in the middle of all this, gold is shining bright.
It's definitely having a moment.
It feels like gold is almost acting as a barometer for the global mood right now.
Yeah.
Like it's saying, hey, things might be a bit shaky out there.
I think that's a great way to put it. Gold often acts as an early warning system for all sorts of economic and geopolitical risks. When investors are worried, they buy gold, and that pushes the price up.
Okay, so let me ask you this. If this gold rush keeps going, should we be worried? Does it mean we're heading for another financial crisis?
Well, not necessarily. A rising gold price can definitely signal that people are feeling more risk-averse, but it doesn't always mean a full-blown crisis is on the horizon. Remember, there are a ton of other factors at play in the economy. It's important to look at the whole picture, not just one piece of the puzzle.
That makes sense. It's like checking your blood pressure. One high reading doesn't mean you're in trouble, but it's definitely a signal to, like, pay attention and maybe make some changes to your lifestyle.
Exactly.
Yeah.
And in this case, the lifestyle changes might mean adjusting your investment strategy, making sure your portfolio is diversified, or even just staying informed about what's happening around the world and how those events might impact the markets.
So as we watch this gold rush play out, what are the big questions we should be asking ourselves? What should our listeners be thinking about?
I think it's crucial to consider how these factors that are driving gold prices, the trade wars, the geopolitical risks, the interest rate policy, how all of that might affect other investments. Will we see similar trends in other safe haven assets like the Swiss franc or treasury bonds? Will the stock market react negatively to all this uncertainty?
Yeah, that's a really good point. It's like this gold rush is sending ripples throughout the entire financial system.
Exactly.
And it makes you wonder, right? Like, is this surge in gold prices just a temporary thing, a blip on the radar?
Yeah.
Or could it be a sign of something bigger, some major economic shifts that are on the way?
That's the million-dollar question. And unfortunately, we don't have a crystal ball. But what we can do is stay informed, keep a close eye on these trends, and be ready to adapt our own financial strategies as needed.
Well said. Knowledge is power, and hopefully this deep dive has given our listeners the power to, navigate these potentially uncertain times with a bit more confidence, and maybe even spot some opportunities along the way.
Absolutely. The world of finance can seem really complex, but by understanding those forces that are at play, we can make better decisions and maybe even benefit from all the volatility.
So to our listeners out there, stay curious, stay informed, and remember, sometimes a little bit of gold can be a good thing, especially when the financial seas start to get a little rough.
Until next time, happy investing. Aside from all this big picture stuff, the article also digs into some more technical analysis of how gold prices have been moving.
Okay, cool. Let's get into the weeds a little bit. They keep mentioning these support and resistance levels. What does that even mean for someone who's not like a Wall Street wizard?
So, think of support and resistance levels, kind of like floors and ceilings for the price of gold. You know how the article highlights $2,750 as this key support level?
Yeah.
What that means is if the price drops down close to that point, traders are expecting to see a bunch of buying activity. That buying pressure should, in theory, prevent it from falling even further.
Gotcha.
And on the flip side, they talk about $2,800 as a resistance level. So if the price gets up to that point, that's where selling pressure might kick in and stop it from going any higher.
Ah, okay. So it's like these are the battle lines where the bulls and the bears are fighting it out.
Exactly. Watching how the price behaves around those levels gives traders clues about, how strong the current trend is.
I see. And they also keep bringing up these SMAs, 50-day, 100-day, 200-day. What are those all about?
Okay, so SMAs, or simple moving averages, are basically lines on a chart that track the average price of gold over a certain period of time.
Well,
They help smooth out all the daily ups and downs so traders can see the bigger picture trend.
so like if the price is consistently above the 200-day SMA, that's a good sign if you're bullish on gold.
Generally, yeah. It suggests that on average, the price has been trending upwards for a while. And right now, gold is actually trading well above all three of those moving averages, which kind of adds to the idea that we might be in a strong upward trend.
Interesting. And the article even throws out some potential price targets, 2,850s, even $2,900. Is that realistic, or are they just hyping things up?
Well, it's impossible to predict the future with 100% certainty, but those targets are definitely within the realm of possibility, given everything we've been talking about.
Okay.
The technical indicators look good, plus you've got all those fundamental factors we discussed, the trade tensions, the geopolitical risks, and the possibility of those interest rate cuts. All of that supports the idea that this gold rush could keep going.
Yeah, it's pretty fascinating stuff, honestly. But I'm curious, what does it all mean for, like, the average person? Why should someone who's not a trader care about these gold prices going up?
That's the million-dollar question, right? But seriously, understanding what's driving gold prices can give you a much better understanding of the global economic landscape and how investors are reacting to it. Even if you're not actively buying and selling gold, it can still inform your overall investment strategy.
So, for example, if gold is going up because of all this uncertainty,
Yeah.
could that be a sign to, like, shift some investments towards other safe havens?
It's definitely something to consider, yeah. Diversifying your portfolio with assets like gold can help reduce your risk during those turbulent times.
Okay, that makes sense.
No.
So let's say someone's listening to all this and thinking, all right, I need to get me some gold. What's the best way to invest in it? Is it as simple as running out to buy a gold necklace?
Well, gold jewelry is definitely a way to own some gold, but it's not usually the most efficient way to invest in it.
How come?
Well, with jewelry, you're also paying for the design, the craftsmanship, not just the pure value of the gold itself.
Oh,
There are other options like gold ETFs or bullion coins that are more directly tied to the price of gold. And they're usually easier to buy and sell if you need to.
good to know. So we've got trade wars, geopolitical hotspots, the Fed potentially playing around with interest rates, and in the middle of all this, gold is shining bright.
It's definitely in the spotlight.
It really does feel like this isn't just some random blip, you know? It's more like a reflection of some deeper anxieties about the global economy and where things are headed.
I think that's a fair assessment.
It really does feel like gold is like this barometer for how everyone's feeling about the global economy right now.
Yeah, I think that's a good way to look at it.
It's almost like it's saying, hey, be careful out there.
Right, exactly. Like a warning sign, maybe.
So, okay, let's say this gold rush keeps going. Should we be worried? Does it mean we're heading for another big financial crisis like the one back in 2008?
Not necessarily. I mean, yeah, a rising gold price can definitely be a sign that people are feeling nervous, more risk averse. But it doesn't always mean a full-blown crisis is about to happen.
Okay.
There's a lot more going on in the economy than just gold prices. We got to look at the bigger picture, consider all the different factors.
That makes sense.
Yeah.
So it's not like a guarantee.
Right. It's more like what's a good analogy? It's like checking your blood pressure. Maybe when high reading doesn't automatically mean you're in trouble, but it's definitely a sign to pay attention, maybe make some changes to your lifestyle.
Yeah, I get it. So in this case, the lifestyle changes would be like, what? Adjusting our investment strategy, maybe?
Exactly. And making sure your portfolio is diversified so you're not putting all your eggs in one basket. And of course, just staying informed, keeping up with what's happening globally and how it might impact the markets.
Right, right. So as we watch this gold rush unfold, what are the big questions we should be asking ourselves? What should our listeners be thinking about as they, process all this information?
Well, I think it's really important to consider how all those factors that are driving up gold prices, the trade wars, the geopolitical risks, what the Fed might do with interest rates, how all of that might affect other investments too.
Yeah, like a ripple effect.
Exactly. So for instance, will we see similar trends in other safe haven assets like the Swiss franc or treasury bonds? And what about the stock market? Will it react negatively to all this uncertainty that's pushing people towards gold?
Those are really good questions.
Yeah.
It's like this gold rush is sending shockwaves through the entire financial system,
It's
right?
all interconnected.
And it makes you wonder, right? Is this surge in gold prices just a temporary thing, or is it a sign of something bigger on the horizon, some major economic shifts that are coming our way?
That's the million-dollar question, isn't it? And unfortunately, we don't have a crystal ball to tell us for sure. But what we can do is stay informed, keep a close eye on all these trends, and be ready to adapt our own financial strategies as needed.
That's some solid advice for sure. Knowledge is power, as they say. And hopefully this deep dive has given our listeners the power to navigate these potentially uncertain times with a little more confidence, and maybe even spot some opportunities along the way.
Absolutely. I mean, the world of finance can seem really complicated and intimidating sometimes, but by understanding those forces that are at play, we can make more informed decisions, maybe even turn some of that volatility to our advantage.
Exactly. So to all our listeners out there, stay curious, stay informed, and remember, a little bit of gold can be a good thing, especially when those financial seas start getting rough.
Until next time, happy investing.